today's Market Sitrep. My name is Matthew Buckley. I'm the founder and the CEO of Top Gun Options. Lots to talk about today after yesterday's seemingly buy on the news rally. Not too much really propelling the market higher yesterday. Yeah, we had some good news out of housing with the National Association of Home Builders, and we had some I don't know why the market thought it was good news, but potentially good news out of fiscal cliff resolutions. But the good news was essentially Boehner caving on a lot of things that he said he'd never cave on, which is never a good thing. It's not a good thing for small businesses. It might be a good thing for corporations. Obviously, he's getting lobbied, like you read about in Lobby Magazine, from corporations to lower our corporate tax rate. And you know who's getting ignored in all that? Small business owners, and that's going to be devastating to our economy. Obviously, small business powers these once United States of America, and if we're just going to give all these huge corporations tax breaks without really looking at small business, we're going to stay in trouble. So yesterday, like I said, we saw good news out of the NAHB, but this morning we actually didn't see good housing numbers, because today is really more important housing numbers for me. And let's take a look at it. This morning at 8:30, building permits came out, and they were essentially, let's just say, flat. And then also at 8:30, we had housing start numbers come out, also flat to a little down. So if the market rallied yesterday on good housing news, then the market should take a pause today on bad housing news. So we're getting mixed signals out of housing, continuing to get mixed signals out of housing. What else is going on today? GM, Treasury, us, the United States of America, taxpayers are finally bailing out of a GM, and we saved GM, or more to the point, we saved the unions at GM. So looking at that. Also, one of the things that's interesting this morning, FedEx came out with earnings, and to just a partial observer or an untrained eye, it's pretty bad results. I mean, they missed by 2 cents, but here's why the stock's up pre-market is their guidance for 2013, their full year guidance. So again, weak earnings, but their full year guidance is good. They're banking on a turnaround in Asia. Good article in the Wall Street Journal yesterday about how they're focusing on cutting costs. But they're seeing a little bit of a change to their business model. And obviously, their CEO, Fred Smith, very entrepreneurial type of guy. I worked at FedEx for a little bit as an aviator. Just couldn't stand flying at night. It was an absolute nightmare. But he's starting to realize that really it positively has to be their overnight model is changing. People just don't feel like spending a ton of money when it can be there 2 days from now or 3 days. So starting to see a little bit of a business shift, and some of the less profitable non-express parts of his business are starting to grow, and it's got to be troubling when the less profitable parts of your business start to grow. So starting to see some delays in aircraft orders or shift away from large 777s to 767. So FedEx, while guiding 2013 higher, still has some internal issues. Why do I bring this up? Well, folks, there's an old Wall Street saying that financials tend to lead us into and out of a recession, right? Well, this isn't our father or mother stock market. We're really in uncharted territory. I like to look at the transports a lot more to see if we're really heading into or out of a recession. Here's another one that you really have to take a look at. The Baltic Dry Index. It's a shipping index, folks. Now, I'm down here in South Florida, take a run on the beach today out of Fort Lauderdale, and I recognize shipping traffic. I'm here to tell you that the Baltic Dry Index is down nearly 40% year to date. That's not good. People aren't shipping things. Now, I know FedEx guided higher, but in addition to running Top Gun Options and being a partner at Wealth Creation Investing, I'm also a strategic consultant. I fly around the world. This year I've been to China, Brazil, Canada, literally around the United States, and I help companies knock out strategic planning and help them organize their companies to improve their execution. And I got to tell you, to a company, when they do strategic planning for 2013, not one of them thinks it's going to be bad. Everybody comes out of their planning with a smile on their face. Even though I try and play what's called the red team, the enemy, and point out everything that could go wrong, they're like, nope, 2013 is going to be great. And then this is why we have several trades on in our model portfolios that show that are banking on a January, February, rip your face off rally in the market, especially after we get some sort of resolution to the fiscal cliff. And then reality sets in, folks. Right around Q2, end of Q1, Q2 is when companies start to realize, like, you know what, our forecasts were probably a little rosy, and then the market tends to pull back. Okay, so that's what we're looking at here. FedEx guiding higher, but really the fundamentals underlying the transports are not good. Yesterday, what happened? Also, gold took quite a shellacking. Why? Well, we talked about the home builder confidence going up, potential fiscal cliff resolution, i.e. Boehner caving, and also Greece, actually, and this is in Man Bites Dog news, Greece got a credit upgrade. So gold, which is traditionally seen as a rush to a safe haven, it took it on the chin a little bit. Also, rumors of a large fund unloading a lot of gold positions really hit the yellow metal, but it's held, it went south of its, psychological 1700 level, but it dipped below and then it held. It's kind of like that, 500 level for Google. It held the psychological level, and I think it's looking pretty good pre-market. So again, gold took it on the chin. If anything, I'd be getting long gold here. We're long a lot of positions in our model portfolios. We have a lot of very bullish diagonals on that are bullish long-term, but short-term bearish, just because of issues like this. There's some short-term gold headwinds, but based on the Bernanke's policies of essentially destroying the U.S. dollar and being a superhuman and propping up this market, gold, death, and taxes, death and taxes are a certainty, and so is inflation, and gold's the only true hedge against that, okay? So going to be a busy day trading in our model portfolio here. A lot of good stuff going on, but I think we're going to see a little bit of a relief from that rally on nothing yesterday, especially as we're starting to get into the details of the fiscal cliff as the week goes on, okay? So I'll see you tomorrow with our market sit rep. Happy hunting. Make sure you hedge.